Good morning, good evening, good afternoon, traders. Steve here at Logic FX Trading. Welcome to another lesson in our Competent Trader series. Now, you probably see a difference between the production of the last video you looked at and this one. It's because there's been a bit of a time difference between the two, and the system's basically different. And what I want to do now is just try and do these without editing. Just do them off the top of my head, guys. So let's go. Let's see how it turns out. And if I'm happy with it, you'll be listening to it. And if I'm not, obviously you won't. So in this lesson, we're going to look at, we're still in the basic identification of flats. And this is a step up from what we did in the building block series, where we kind of just looked at what the theory is. And now we're going to look at, how do these things look on a chart and how do you identify them? That's basically what we're at. So let's start with the basic flats. There's three basic flats that are three basic types of flat correction that Elliott identified. There's a regular, there's a running, and there's an expanding. Okay, so let's deal with each one in turn. And we'll just take our little tool over here and we'll just do a recap of what you've learned in the building block series. And essentially, let's just start here. Essentially what we have is, and we'll do them in the bullish market, but obviously the same applies in the bearish market. So price is moving up, and obviously it doesn't move in a straight line, but we'll use a straight line to indicate that there's our impulse coming up. And once our impulse is finished, remember an impulse is usually a five-wave structure. But and each, as you get 1, 2, 3, 4, 5, this is where you get your corrections. And remember, it's a flat correction. We just shortened it there. So you'll get possibly get a flat correction in there. You could possibly get a flat correction in there. And then at the top, then this whole move has to be corrected. So you'll possibly get a flat correction in there. So that's what we're looking at. You get the impulse, you get a correction, impulse correction, impulse correction, impulse correction, impulse correction. So each of those corrections, as we've already seen, some of them are zigzags, some of them are triangles, and some of them are regular. And some of them are flats. And we're going to look at those now. Okay, so let's get back on with it. There's our impulse. Let's take our tool. You get your first wave back, which is an A. You get your next one up, which is a B, and you get your next one down, which is a C. Okay, so that's what you would call a regular flat, where B comes up to the area. And remember, this is not painting by numbers, guys. Nothing is exact in trading or in charts. Sometimes they come exactly, but a lot of the times they'll either just go slightly beyond or slightly below, but they'll come into the area of the start of A. B will come into this area of the start of A, and then you'll get a C, which should come down and break A. In other words, this should come down below the area of A. It can really extend, but when we're just looking at the theory, we'll just bring it there. We'll just bring it below A. And then, of course, the makeup of it, in theory, it should be a 1, 2, 3, a 1, 2, 3, and then a 1, 2, 3, 4, 5. In other words, this and this should be made up of zigzags, and this should be an impulsive wave. Okay, as we go on, we'll see that there are variations in that, but that's what makes trading difficult, because it's not as simple as going ABC, 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 which is the reason why a lot of traders fail. Okay, let's look at the next one, which would be what we call a running flat. So there's our impulse coming up, and then we get our A comes back down, but this time our B extends beyond the top of A. Not just a little bit, guys, but a half decent amount. And that's all we'll say at the moment. We'll get into it more when we're looking at interpretation and things like that. But this time, instead of the C coming down and breaking A, it only comes to there. In other words, if you take that, and that, and you use a trend line, Sorry, let me just take that out of the way. And you use a trend line, your trend will continue in an upward direction, despite the fact that you're having a correction. And sometimes what happens with this is that people misinterpret that because maybe it's not as defined as that. And they're still looking for the correction. And in actual fact, the correction's over when price pushes on up here. So as price comes up, people are looking for a nice A, B, C regular flat or a zigzag, but they're expecting price to come back down into that region. And what happens with the regular is it comes down, it pushes up, it comes down to there, and it keeps going. So price never comes down into the region that they expected to come. And the reason that that happens is because of upward momentum, bullish momentum on the, you know, whatever in this case would be the pound. If the pound was really bullish, then the correction would be a running flat, guys. Okay, let me take that off the screen. And then we'll hit the next one. Oops, let's just delete all of that. Okay, and then the last one is an expanding flat. And we know we've seen these all before, but let's just remind ourselves. So an expanded flat or expanding flat, yet again, you start with your A correction. This time, yet again, the B extends beyond the start of A, but then it comes down with your normal C that breaks A. So yet again, if you put your trend lines on there, this time the structure is expanding. This time the structure is expanding. So yet again, we add in what it should look like in theory, which this should be a little zigzag. That should be a zigzag. And if you get this, now sometimes they don't look like this, guys, but we'll talk about that later. But if you get a setup like this, it's that three structure. They'll give you a clue that you're about to get a 5-wave impulse down that will break that. And that's a very good signal for an impulsive trade down, guys. Okay, we'll often see that. And just recapping on the other ones, you have your impulse, you have that, you have that. When you're about to get your C, either because you've had a double top there, or because this has been a 3 after a 3, in other words, a zigzag, even if it's extended beyond, guys, most of the time you will get a 5-wave structure coming down. Now, sometimes it will be running and therefore it will be truncated, in which case, you know, that sometimes you can get caught out like that, where it turns. But okay, fair enough, not to worry. You have a stop loss, which means that you should be able to protect some of your capital. But we'll talk about how you go about trading these later on. Okay, so there you have the 3 major types of flat correction that Elliott identified, guys. What we'll do now is we'll go and we'll look at a few images. I'll try and pull up a few images of Google or TradingView or wherever I can find them, and to show you what they look like when they're complete, and then we'll go and look at them on a chart. Okay, I'll just pause this in the meantime. Okay, I found one here. Now, the reason I'm picking this one is purely and simply because it isn't, or it certainly doesn't look like a straight A, B, C, 1, 2, 3, 4, 5. It doesn't look like that, but yet it is a flat correction. And what we can do is we look at the whole thing, A, B, C, where C has come down and it's just broken, in this case, broken the bottom of A. There's the bottom of A, and there's where C has ended. You can see that C is pretty impulsive. And in this case, these are, yeah, they're quite corrective. But yet again, the reason for showing you this one is, well, it's actually the first one I've come across, but the reason for showing it to you, I almost didn't show it to you, But the reason for showing it to you is to show you that they don't always look nice and clear and simple, which is part of the difficulty of trading. And the reason why I'll often wait, depending on the time scale, of course, I'll often wait to get the double top before actually trying to trade them, because this is difficult to trade, guys. If you get your double top there, then you get your drop and your pullback, then you know, hey, that's the 1, that's the 2. Here, we're pretty sure of what we're going to get. And it's a trading opportunity from there to there. But we'll talk about it later. That being set up by what we got there. Now, can you trade this? Well, you can try to trade it. But as we'll see going on, they can be quite tricky to trade, guys. That's why we often look for impulses, third waves, fifth waves, and C waves is where I do most of my trading, guys, because they're most predictable. Okay, let's look for another one. Okay, here's another one I found, and we're just looking at this portion of this chart, guys. Don't be worrying about the other part. That's a much more complex thing that you're looking at there. Just this portion. As you can see, there's been an impulse which they've labeled as the first wave. We don't know what's going on over here, but clearly there's been a push down, a bearish move down, and this has been the first where what we would normally draw as a trend line there. We've had a break of the trend for the first wave, and then we're looking for a correction to get into the third wave. Now, in this case, and this is often what can happen, is that they've had an A, B, C, little zigzag, as we said, where, let me just draw on this. Okay, so it's a little, oops, sorry folks. Let me just pause again to get. Okay, so we have a little A, B, C, a little zigzag, an A, B, C, another little zigzag, and then we've an impulsive move there. You can see this impulsive without trying to count 1, 2, 3, 4, 5, because sometimes they just come hurtling right down. And if you were going to it this is on a daily time scale, remember guys, if you were to go into this impulse in say a 1 hour time scale, you may well be able to count 5 waves in there, but sometimes they're not obvious. But if you see a move that looks like that, even without counting the waves, guys, you can see it's impulsive, as opposed to something that would move more like that, which obviously is corrective. But that leg would be impulsive, that leg would be impulsive, but this bit's the corrective bit in between. Remember that it's all fractal, guys, and each correction is made up of little impulses and corrections, impulses and corrections. But we're looking for them on a certain time scale, which is tradable, which are tradable, should I say. But there again, you have a impulse, correction, correction, C wave, back down again. Then you get the second wave. Oh, they're counting this whole thing as from there to there. Oh, let's not get into that, guys. Okay, so that's an A, B, C. That's a little flat correction there. Okay, let's go and look for another one. Okay, this time we'll have a look at a running flat. This isn't the best example in the world, guys, but it's just to give you an idea. It's actually very complex. It's a complex running flat. But I'll give you the idea. They've labeled a 1, 2, 3, 4, 5. I'm not saying that's completely correct, guys. I don't actually think it is. But the running flat bit, there's the top of their A. There's the bottom of the A. In other words, they've an A that runs like that. Then they have a complex correction for a B that runs from there to there, like that. And then they have a 5-wave impulse down here for a C, which ends in an ending diagonal there. But the important thing is that B is above A, and C is also above, sorry, B is above the start of A, and C is above the end of A. So there's your A, your B, and your C And if you were to draw a trend line between them, it would run like that. So you have an impulse, you're expecting it to correct back down before it goes, and it actually keeps running with a correction that doesn't break A, and then it keeps going. They've called this a mischievous running flat correction. So let's go and see if we can find a more simplistic one, guys. Okay, this one's a bit more, it's still a bit of a complex correction, guys, but nonetheless, it's a bit simpler. So let's have a look at this. We'll just have a little draw on here. I'm learning how to use this. So there's your A. This whole thing's your B. And then you have this impulsive move for a C. So C does not break A, and B is just, well, there's the thing about this one. It's just above there. And so they're kind of calling it a running flat. I'm not so sure that this, and this is the difficulty, guys, because you go through the internet and you see these things without commentary, and therefore you assume. The important thing is you can see that they're a lot less, they're a lot more complex than what we draw when we're just drawing the lines, guys. The important thing here was that you can see that it's an A, B, and an impulse, but the impulse, as you can see there, has come down very, very sharply, and when you count it, you have a 4, you have a 5, it's finished, unless that 5 were to be extended. But when you're getting into that region, despite the fact you haven't broken there, you're looking for it to come back up again. Now, those are the intricacies, guys, that we'll see on a daily basis of how we go about interpreting what's going on there. Let's have one more look and see if we can get a third running flat. Okay, guys, I've actually got a better example of a running flat on the charts. So rather than spend time trying to look for another, someone else's work, we'll go on and we'll have a final look at this is an expanded flat. This isn't a great example, but yet again, you can see the structure. And this is the test that we have when we're looking at real charts of trying to work out what we're actually looking at, guys. So here they've had their impulse coming up, and then they've gone into a complex corrective phase, possibly an A, B, C coming down there. I don't know how they've justified that little bit, but anyway, they've put an A down there. B has come up to be above the A, and then we've got a 5-wave impulsive wave that's ended in an ending diagonal, guys. And there's your C. So if you looked at this, if you had trend lines on this, you can see that price comes back, it spikes up, and then impulsively comes down, and you end up with the end of your C below the end of your A, and then price moves off in an impulse direction again, or impulsively in a bullish direction. Now, yet again, the important thing for this is, guys, if you can identify what this is, from there to there would be a fantastic trading opportunity. But yet again, it's about correctly identifying it. And sometimes I'll just clear this up, and I just want to add some more information here. I don't want to make it too complex, but just from a trading point of view, how we would trade this, we would have a trend line up there. We look for the break of the trend line, we look for the pullback, and there we start to look for an entry. And on the break of that, we would be in a fantastic trade all the way down. We would identify that as an ending diagonal, and we would get out down there somewhere, and that would be a beautiful trade. You may even just take that bit, guys, because you know you're in a corrective structure, and your larger analysis will not have you trying to trade this further down than the break of A. So that's what you'd be looking for initially. And at that point, you may just say, well, that'll do me. So that's how you would go about trading that. But anyway, let's move on, and we'll go on to some charts and try and show you these in some real life examples, guys. Okay, folks, this is one I actually traded, and if you, well, any of you have been with me for a while probably won't be watching this video, but we traded this one and it was a really nice trade. It was one of the best trading opportunities we had in 2018. And this was the pound dollar, and we saw this same structure on the pound index, guys, and it was this that wired us off to it to look for it. You can see there, just taking the, we don't count every little wave, guys. We've got to be a little bit more brutal with the thing. You can see there that you have an A correction. You could possibly say you have a 3 wave in there. You have an A wave correction. It's come up, back down, up, double top. And given that all the way up here is this rose, this come up in a corrective manner rather than an impulsive manner. It was corrective from the way it came up. And the whole way we were looking for a drop, a correction of it. And when it gave us this setup, we went, whoa, this now looks like it's going to drop. So we were on it like a ton of bricks, guys. That's probably not the best analogy, but we were all over this because we saw it setting up. Remember that we're on a 4-hour time scale here. We saw this thing setting up. In actual fact, because of the complexity of that at the time, and this is something more than what we should be doing here, but because of the complexity of that, as we come up here, I expected it to give us a zigzag, because that didn't look like a straightforward 3. It looked more of what we would call a diagonal. And hopefully we've covered diagonals. It looked more like a diagonal. Then you would get that, and then you would get another push down. That would give you your zigzag. So initially, that's what I was looking for here, and I was actually surprised when it pushed on up. But the minute it gave us that, then we could say, hold on a minute. We've got an A, a B, a double top. We're going to get a C, and we projected it to come down and at least break that, although we do know that they can come even further. And we'll show you how far they can come, how to target C waves. But for now, using Fibonacci's, but we'll look at that later. But for now, we knew that if it had come to there, we were going to get something that comes down and breaks that in all probability. Why were we not expecting a running flat? Well, first of all, that didn't go beyond. Therefore, we were also not looking for an expanded flat. We were looking for a running flat because we had a bang on double top at that stage. Not only that, but this movement was not as impulsive. It was almost corrective, this move up. It certainly was not impulsive. And therefore, you wouldn't expect a running flat, guys. Because if this was really impulsive and coming up really fast, then you could say to yourself, well, maybe we'll get a running flat on it. And the reason that I want to show you this is not just because of that. We'll go back and we'll look at it on it. Oops, sorry, picked the wrong chart there. Here we have it again, but this time it's against the dollar. You can see a very similar structure, very similar setup to what we saw on the index here, just pushed on a little bit. So if you're down in the 1-hour time scale, that's the reason that we wait for it to break and come back. And you can see there, I don't know exactly, but that looks to me like I was looking for a break of that to get involved. And away it went. Here's what's even more interesting about this. The whole time down on this, as once we get into these sort of regions, I think I got out around there because I was expecting a pullback. And it didn't happen. It ran on down. And then we started to get a pullback there. It did this. I expected that before it would continue down. We didn't get that. Remember, we're backing up our analysis with fundamentals. We're watching the news every day. And this was in the news. The news was such that we're expecting the pound to continue to drop. What did we get? You guys tell me what that is. That's a running flat. So instead of getting a normal pullback, a zigzag, or even a regular flat before it continued, we got a running flat, which shows you how weak the pound was at the time. It came down, running flat, continued on down. So there you have a running flat and a regular flat within, within a few months of one another, from February through to August. Remember, we're on a 4-hour time scale here. Running flat, regular flat. Okay, now what we need to do is I'll go and look for some more examples. So just pause you again there, guys. Okay, folks, and here we have an expanded flat. Took me a little while to find one because they're not as common as a regular or a running flat, but here we have one. Basically, we've had an impulse coming down here. We've had an A correction. Sorry, I don't want to mislead you there. I'm not entirely sure where the ABC is, but so just let's look at that. A, B, it's come down further than the start of A, and your C has come beyond the end of A. So you have an A, B, C. Now, the difficulty with trading these is this, and this is not really what we should be doing in this, because this is supposed to be a build-up, but just to make this a little bit more interesting for you, is that when you get something coming down like that and you start to get a pullback, you're saying to yourself, you're possibly looking for a continuation. Do you see the way it's come on down there? Chances are your analysis has told you that price should continue to drop, but we're looking for a correction. So you've had a start of a correction, it's then pushed down. And what people will often do when they get to here, they'll say to themselves, they'll put an order below there, and they'll say, they're looking for this, guys. And they say, well, that's a little zigzag, that's the end of the correction. Off we go. Once it breaks down here, through here, we're going to be away. And what happens is it comes down, it opens your trade, and then it does this, guys. And if you've opened the trade there, chances are your stop would be above there. So it just comes up, takes out your stop, and then it turns and off it goes. And the problem with it is that when that happens, you kind of get a little bit of a sickener, and you can't kind of stay away from it because you've just lost money on it, and you go and you look somewhere else. In the meantime, you come back and this is going on, and you've completely missed a fantastic opportunity. So that's the danger of expanded flats, guys. Okay, listen, that'll do for this little identification video. Probably added a little bit more in there than what I intended to do. But the important thing is that we've started the process of going from seeing something that looks like that to seeing something that looks like that, which is the reality of what these symbols look like on, or these structures look like on a real chart. Okay, guys, I hope that helps you, and I'll see you in the next lesson. Bye for now.